China flexes, surrounds Taiwan. Yesterday was the divorce. Okay. Today's the flex. And it's a big flex.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's morning meeting, we'll be talking about MUFG's Commodity Weekly. They have some comments on metals. And going on right now is a flex by China in the Taiwan region. We'll talk about a military setup there that is, I think, ominous going forward. Not today, but going forward, it's going to be a problem. We'll also talk about yesterday's activity in gold. So we'll do it in that order. I want to throw a chart up in gold, and we'll talk about that as well. Let's get started by looking at the markets. The dollar is down 15. 10-year yields are 442 unchanged. The dollar is 104.75 if you're not looking at a screen. S&P 500 is 53.40, up 30 handles. Yesterday's stock market was sold off. NVIDIA numbers came out after the close. Market re-rallies. Are you not surprised if you're a metals person? Stocks get knocked down with precious metals. We think, okay, we can live with that. And then some fluffy number comes out and stocks go back up. Anyway, the VIX is 1161, down 69. Gold is 2367, down another 10 and change. Silver is 3054, down 22. Copper is 477, up a penny. Gold, silver actually relatively stable, which makes sense. WTI is up 82 at 78.57. Natural gas is 275, up 2 cents. Bitcoin, 69,800, up 669, about 1 percentage point. Ethereum, 38.68, continues to rally, up 131. Everybody's front running the Ethereum ETF now. Platinum, palladium, both down. Palladium down more. Now that's what you expect to see. Like everything is getting sold. Palladium will just get sold a little bit more. That's a normal day. You know, I mean, there are no normal days anymore, but that's the anchor of normal behavior in PGMs. Soybeans up 3 cents at 12.41. Corn 4.53, and wheat down 6.98. So today is an unwind of the current trend for grains. All right, so let's get started. MUFG's Commodity Weekly on metals and a China flex in the Taiwan Sea, China Sea. I don't know. We don't know what it's called anymore, but we know it's called something. Oh, there's a quote that I saw William Shatner. I read William Shatner make like on Twitter a while ago, and he was talking about space travel. And he said, between the Earth and the moon will be business, and outside the moon will be NASA. So we're colonizing space with business. And that's going to be our reason to put military there. Anyway, just that's how it works. That's what's coming next. The news reminded me of that. I'll show you in a second. Yesterday's stories, the BRICS G7 divorce agreement, which today is actually a continuation of that. After the divorce agreement, China flexes for its new bride, Russia, or new beau, Russia. I don't know, however you want to look at it. Michael Oliver says it's not just another gold bull market. It's not to say he's recklessly bullish. And beyond 2460, gold can hit 2750 by U.S. election. By U.S. election, not necessarily tomorrow. Okay, MUFG Commodity Weekly. Those who are not familiar, MUFG is the largest financial institution in Japan, and they frequently, when they speak about metals, they can be a little bit more frank than others. And I say that because they're not a bullion bank, but yet they represent a lot of buying in Asia. Okay, not a lot of selling. So anyway, that's it. They're big, they're important, and they're a player in commodities, although they're not a headline player. Anyway, here's some comments on them in base and precious metals. Base metals, copper continues to trade in uncharted territory, testing all-time highs from a striking short squeeze on the COMEX. Copper's path to scarcity is garnering traction, which absence any near-term mine supply solver, the only way to maintain market function will be via demand destruction. It says it all. Interesting chart here, chart of the week, their chart of the week. Commodities outperforming equities so far in 2024, if I can make it bigger. Oh, look at that, it worked. Take a look at this difference between commodities and equities. That's this year. We've got a long way to go to catch up, just like GDX has a long way to go to catch up with gold, and SIO has a long way to catch up with silver. But note this. The commodity equity spread this year is entirely metals and a little bit of grains. It's entirely metals. Energy hasn't gone anywhere. You want to look at natural gas? No, you can't look at that. It's entirely metals. Okay. Is it going to stay that way? No, but I think if commodities are going to stay that way, metals have to give some room to oil. That's a trading comment. Precious metals. Gold's ascent to a series of records so far this year reinforces our 2024 commodities views that gold is our most bullish call this year. That's right. They said that several times. They're tepid on commodities, bullish on gold. On a trifecta of eventual Fed cuts, supportive central bank demand, and bullion's role as the geopolitical hedge of last resort. So every bank has their reasons for buying gold. Theirs are the following. Supportive central bank demand, that's your support. Bullion's role as a geopolitical hedge of last resort. Anytime there's bad news, people are throwing a little bit of money into gold now. And the third part of the trifecta is the catalyst for a bigger move, Fed cuts, if they come, right? But yeah, they have been, before everyone raised their prices, MUFG was bullish on gold while they were tepid on everything else. And so far, they're spot on. I like these guys. Here we go. Metals, base and precious are, what did I just say? I just said that. No, it's not that big. Are propelling the overall commodities complex higher this year. Right. So if you're a trader, if you think commodities are going to outperform, then within the commodity sector, you're going to see a rotation out of gold and into energy on some basis as mid-year approaches, because investors go, take some profits in gold and put it in oil. There's going to be a kind of a little bit of a reallocation. There'll also be other people saying, I missed out on the first half of the year in gold, only put some in the second half of the year. So net gold should be unchanged and energy should be higher, using flows as a barometer. Anyway, that continues at bottom. It's a weekly report. It's very good. It's very clean. It goes through every commodity sector by sector with some interesting charts. China flexes, surrounds Taiwan. Yesterday was the divorce. Okay. Today's the flex. And it's a big flex. I'm not trying to say it's the, if I was doing this for advertising and I was on mainstream media, I'd be telling you, there could be war. Stay tuned. Well, stay tuned. There could be war, but not today. I mean, if there is, so I'm wrong. I'm long gold, whatever. Okay. But the overview on this is whenever you have a big decree come out by nations, in this case, Russia and China, surrounding it, you usually have events that flex. Now, who is the flex for? The flex is for their people. The flex is for their people. It's a show of strength, right? We call it saber rattling because they're provoking us or we're provoking them. They're doing it domestically, okay? So what did Russia do before the event? It seized the assets of G7 banks. What's China doing after the event? Well, it's getting pretty serious about its military operation around Taiwan, citing something that they've been saying for a while, but flexing on it. Anyway, certainly something that Joe Biden doesn't want to hear right now. So let's read a little bit of that. The Eastern Theater Command of the Chinese People's Liberation Army started joint military drills surrounding the island of Taiwan from 7:45 Thursday, according to Xinhua, if I'm saying it right. The drills are being conducted here, I'll show you that picture a little bigger. Pretty scary, right? That's their picture, right? That's the Chinese media picture. Now, if you think our people are propaganda-ish, theirs are as well. You don't know that they're everywhere there, but they've got some real people around there. It's the real deal. The drills are being conducted in the Taiwan Strait, the north, south, and east of Taiwan Island, as well as around the islands of Kinmen, Matsu, Wuki, and Dongyin. I remember years ago, China was building man-made islands, and we just let them do it. Li Shi, spokesperson for the Theater Command, said military services, including the Army, Navy, Air Force, and Rocket Force, that's a cool name, of the Theater Command are being organized to conduct the joint drills, codenamed Joint Sword 2024A, wink, as if there'll be a B, from Thursday to Friday. The drills focus on Joint Sea Air Command combat readiness patrol, joint seizure of comprehensive battlefield control, and joint precision strikes on key targets, Lee said, adding that the exercise involves the patrol, yada, yada, yada. Okay. This was allegedly provoked by, I don't know what the president's name in Taiwan, Lai, I think. The spokesman said the drills also serve as a strong punishment for the separatist acts of Taiwan independence forces and a stern warning against the interference and provocation of external forces. So there you have it. Biden's got something else to worry about now. He's got to flex back, or he can just have the news, not talk about it. He's probably going to have the news, not talk about it. Market news, skin shedding. That's my phrase throwing up there. The news reports NVIDIA does well. The Fed says it's probably not going to cut now. Don't be surprised if it doesn't. U.S. home sales drop, finally. Goldman Sachs says, look out, we may not have a cut at all this year, and Target's in the crapper. As a company, they're doing, people aren't buying stuff anymore. Geopolitics, there's a little bit more on that there. Here is the data today. PMI is at 945. It should be softer. The question is the market looking for it to be softer? I don't know. And there's the premium report from MUFG. Let's go to the gold chart for a second here. We'll do a little hand holding before things get going. So let me take another sip and get my thoughts together here. Silver's more interesting than gold. Just looking at this now. Silver's more interesting than gold today, but gold's easier to call. Okay. First of all, we've come a long way. It wasn't too long ago that this stuff down here filled your whole screen. Okay. This is unprecedented. It won't go on forever. Markets will revert to trend over time, but the trend is up. Don't get me wrong. The trend is up. Okay. This is, a little bit of froth, and you should expect that. Now, there are, on a short-term basis, moving averages are helpful. People will buy or sell at moving averages. My guess is they're going to sell below the 50-day moving average. My guess is they're going to buy at the 100-day moving average and then possibly sell below it. So no buyers at the 50-day moving average this time. Okay, so what else did I want to say about that? Let's throw some art up for you. All right, see these two lines here? This is the range we were in about 2 weeks ago when I said above this we run, below that. Remember, there was buying there, below that. I don't know if it goes below that, but there's buying there. This is your central bank buying. See this down here? That's your central bank buying. Now, will they be there next time down? I don't know. This was not central bank buying. Central banks don't chase, okay? They're price sensitive. This is other people chasing. So if the market gets back into here, expect to be buying here. If the market gets back into here, expect it to go down to here. Don't panic. I'm not worried about any sell-off that stays above 2146. Why? Because that's where the March 1 breakout initial happened. This is the money that's the smartest money, the most profitable money. If they buy it again here, then they sold it up here and they're making money. That's a sweet thing to say. All right, let's pull up. Oh, here's the channel that I was talking about. That's the big picture. Put up some moving averages. So there's that yellow line. That's your 50-day moving average. I should have looked at that earlier. We're below it. So we got below it. Someone sold it. We could rally back up to it. And you'll see how it behaves when it rallies back up to it. But my guess is there will be more selling there. And we'll get into the political reasons for that another time. But I do believe that the Biden re-election campaign is going to be keeping a lid on this. Here's the 100-day. Okay, so check this out. This is the channel that I'm referring to. This is the big picture, right? It goes all, you want to draw that channel all the way up to here, you can do that. And it comes in right around here, which is, boom, there you go. And I don't get worried until we get down to this channel, which comes in right around here. There you go. That's gold. Now, as I said, gold's less interesting because it's easier. I see what's going on in gold. Silver is more interesting, which means that I think it may offer something more dynamic. And let me stretch this out a little bit. Here we go. Silver holds above the 50-day. I did not know that. I'm looking at this for the first time. Silver holds above the 50-day, holds above this wick. Remember, let's go back to gold for a second. Well below that wick, okay? All right. We'll call this is the era of people selling silver to buy gold. Again, we'll switch back. You ready? Gold, channel up. Silver, dead sideways, okay? Gold takes off. They can't keep a lid on silver. Silver becomes its own market again. This is macro money coming in. I don't think macro money buys the dip down here this time, but I'm not telling anyone to get short. But we had the blast off, right? It's being sold to finance gold longs, being covered while gold rallied. And this is the last one. This is like the last of the, I would call them idiots, covering. We get above here, and now silver's its own market. So, and it was pretty steep. Unless we get below here on a short-term basis, on a trading basis, right? Unless we get below here, 29.79, I would not be worried, which, by the way, it kind of coincides with this here. So this little 3-day thing here, think about this. See this here? I'm bullish. I bought it, okay? I bought it. Market goes sideways and dips. Anyone who wants to sell it can sell it because it stays there. Anyone who wants to buy it can buy it. Stays there. People place their bets. Next day it goes up. Anyone who sold needs to buy it here. It should be bought in this area. I don't know, but it'll be below this 50-day moving average. Makes me a little bit annoyed. But as of today, I'm not bullish. For the next couple of days. I'm not bullish because of Biden. We'll talk about it some other time. But as of today, see that there? That little hourly there? That's an algo, okay? This is a sell-off, obviously. This is a chop where the big buyer comes in down here and people are puking into him. You have a battle royal down here a little bit, and then the selling gets done, and so the buying starts to slowly creep in and put an algo in the system. So this is catching the falling knife repeatedly, and this is the algo buying. If we go up, it's because this guy at 30.26 or so did not get filled. That's encouraging. Anyway, I'm Vince. Have a great day. Cheers.
Thanks for watching this morning's Markets and Metals Update with Vince Lanci. Brought to you each day by Miles Franklin Precious Metals, where this week's special is 2023 dated 1-ounce silver Krugerrands from the South African Mint for only $3.10 over spot. And even with the price rallying, fortunately, the premiums are still on the lower side. And to get a full price list or place an order for silver Krugerrands at $3.10 over spot, just email us at Arcadia@MilesFranklin, and we'll be happy to get you set up with anything you need. And as always, thanks for watching. Hope you're having a great day out there. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.